Okay, welcome everyone. I want to give a quick update on the market analysis and some individual trade ideas. Just going to do that real quick this morning just to get it out there. So we're going to get started here with triple Qs. A couple things about triple Qs, and we look at the hourly here. You can see that basically we filled the gap yesterday, and there was a gap right here at about 357.62. Rallied. We were holding above that. So at this point in time, I think I'm going to pull the plug on my triple Q short. The reason why, let me kind of explain the reason why. If I look at the daily here, the sell signal was right here basically the other day. And even if you waited to the end of the day, then you're underwater by about 0.5%. And if you took the short at some point in the day when you got the breakdown, you're probably slightly profitable. So that's my situation. I'm just slightly profitable, just about break even. And the market's kind of grinding higher. It's back in its grinding higher phase. Here's the reason why I think we're likely to just going to continue to grind higher over the next few days. And that's because we've got earnings on the major tech stocks coming up. So flipping over to Apple, we have Apple earnings coming up on July 27th. Amazon earnings coming up on July 29th. Google earnings coming out July 27th, and Microsoft on July 27th, it looks like. So we've got just a few days before earnings come out, and these stocks make up a big portion of triple Qs. Microsoft and Apple alone is 40% of triple Qs. So I'm not interested, if we were going to continue to get a breakdown before earnings, then that's kind of what I was playing it for. Now at this point, I think it's a better trade, or it's lower risk to wait for some of these earnings to come out to figure out where the market is going to go. We could easily sell down after these earnings. Likely they're going to come out and blow out the expectations, but it's not so much about the expectation game. That's really just a game. They set expectations in a certain area. The CEOs and management of these companies know the expectations. They buy back their shares or do what they need to beat those expectations. And so really it's just more about what the market does after we get those earnings reports. So we're getting a little too close for big major earnings for me to take, to really stay in a big position in any real way right before earnings. It's just not really risk reward. It's just not worth it. So I need to get past those earnings. So I'm going to go ahead and close that one out for like a 0.3% gain, just very small gain, basically break even. Nothing's technically changed on the sell signal. I think there is still a sell signal intact. You have we have clear breakdowns from this bullish pattern that we were in. You had a sell signal here, but I just think they could probably grind it around and maybe even pop it slightly above, and then we'll sell down after earnings. It doesn't mean we're going to sell down the day of earnings or even a day after earnings, but I think technically this triple Qs is set up to sell down, but I just want to get through those earnings. Okay, keep an eye on this short idea, American Eagle, AEO. They've now gapped it back above the trendline support. So we're coming off April 2020 lows, clear uptrend line right there. We had negative divergence here at the high, and we had a sell signal right there on July 16th. But you can see what they've done so far is it sold down just a little bit, and today they're back above support. So unless this gets rejected here, and we see, it can, maybe they hold it here, but if we don't sell off tomorrow and get rejected, then this is a bear trap. This right here was a bear trap, and we're likely going to go higher. Now, I still think there's a very good probability that we will get rejected, and I also think even if it does continue to go higher, I think we'll sell down and actually get a firm sell signal or another one basically in the near future. So the way I'm going to play it, I'm going to stay short, but if it holds this level tomorrow, I'll cover the trade. I'll cover the short trade, get out of it, and wait for the next breakdown. Otherwise, I would expect it to break down here basically either today or tomorrow. We're past earnings, so there's no reason why we shouldn't break down. We have negative divergence. everything is there intact for an actual breakdown. And this could just be kind of a fake out move where they pop it up, run stops, and then it sells down. Okay, so that's how I'm going to trade it. I will be out of the trade if it can continue to hold and move higher, starts to kind of hold the support and move higher. Otherwise, I'll look for that breakdown, and that's how we're going to go. Just for anybody that didn't follow along in the past videos, I'm out of this Toll Brothers trade. We took the trade on the sell signal right here. For me, it was about a gain. I covered it a couple days ago. That was a gain of about 15%. And I took my profit on as we ran into this support level of about 52.77. That was a pretty decent support, and I just didn't see too much downside below. Now, if it wants to break below, there's another level of support right here at 50.37. The next sell signal, at least for me, would come on a solid break, an impulsive breakdown of that level. If we get that, then I think it's likely we're heading all the way down to 40.60. But until you get that breakdown, there's good support in this area. So I covered that trade out of that one with a 15% gain. SeaWorld, I'm still short. They're just, you can see they rallied it back into resistance. So yesterday they rallied it, didn't quite get to resistance, which is sitting at about 46.40. Today they popped it above, but we're back below. We're kind of just hanging out in that area. So I'm still short this one. I think we're likely heading down to 36.77. That's a good level of support. So I'll be looking for this one to continue to the downside over the near term and looking to cover down there. So no reason to get out of that one as of right now. And Schwab, I'm still short this one. You can see we're still downtrending clearly, even though over the last 2 days they've been rallying. But you can see we're moving lower. We're in a series of waves. So I'm expecting that move or that trend, the major trend, to continue. Even though it's bounced over the last 2 days, over the last month or so, it's been downtrending. And so there's your uptrend on that Schwab. You have a negative divergence that's started to play out. This negative divergence was telling you back here that you were likely going to get a trend reversal, and we've seen that so far as we've started to downtrend. So I think we're going to end this move in a pretty impulsive move to the downside. I'm looking for 62.23 area as a level of support, and potentially all the way down here at 51.60. That would be a final target if it was to get down there. So those are the two levels I'm looking. Probably take some profit here. Likely get a bounce there. And then the next sell signal would be on an impulsive break below that. So the way you can do that is just cover your entire trade down here at support. And if it bounces, you're not in that trade, and then just reshort the thing if you get an impulsive break of that support level for the next level down. Or another way that some people do it is they just take like a partial trade. So it'll come down, they'll take half their trade off and hold the other half for the move down to the final target. Okay, MGM, I'm still short this one. We did rally yesterday. We closed above this short-term gap. You can see here on the hourly, we had a gap the other day. We closed above it, and we ramped it up to the next level of resistance, which is sitting there at about 39.67. We had some reactions. I pointed that out in past videos. We had reactions along this level. There's a reaction. There's a reaction. There's one. We had another one right there and another right in here. So it looks like that's going to hold as resistance, and we are going to start our next move to the downside. I'm still looking for 34 on this one. Still remaining short. No reason to get out of that one. JCCI, I'm going to stay short on this one. A couple reasons. One, there was a really solid uptrend line on JCCI coming off the March 2020 lows. We had a bearish rising wedge, and we had a sell signal. We had negative divergence that was building for a while when we got that sell signal. So that tells me that we're likely reversing trend, and we just haven't seen any real move to the downside. So this negative divergence remains intact. We put in another divergent high right up here, and there's been we haven't erased this negative divergence. We haven't burned through it. So it's still intact. I still think it's telling me that we're likely going to have a downtrend in this stock. So I'm looking for 62.30 as a level of decent support, and then potentially all the way down here at 52.30. Another level to watch, maybe 48. So those are three levels that I'm really targeting, and I think that's still going to play out. The negative divergence tells me that there's still likely a downtrend coming in this one. And we broke support. That's the other key thing. Negative divergence isn't a reason just to short. We did break this support that we were holding for, since March of 2020, over a year of holding that support, and it's now recently been broken. So there's just no reason to not, stay short in this one. General Motors still short this one. No reason to get out. We have uptrend line there. We had negative divergence at the highs right there, and we broke trend with a sell signal right in here. So I don't see any real reason to get out. You sell down, you bounce, you sell down, you bounce. You can see we're downtrending. So I think that's going to continue. And moving on. Okay, EMR on the daily. I'm remaining short on this one. Clear uptrend line coming off the March 2020 lows. And the trend was broken. That's a really solid sell signal right here. We had negative divergence at the highs here. You can see the downward momentum. And typically this negative divergence, and it hasn't been taken out. It's still there. It still remains. So we had a sell signal. We kind of back tested, put in a slightly new high, a new divergent high. Then we sold down. And over the last 2 days, they're rallying it, but we're still below that former divergent high. We've still broken trendline support right here. We still have negative divergence. Nothing tells me it's time to get out. Someone yesterday also commented that there was bullish divergence, and there may be on the hourly. But I don't even see it on the hourly, to be honest. Let me look here real quick. Yeah, there's no bullish divergence even on the hourly. You can see here we made a low here, which was a higher low in momentum, but it's also a higher high in price than the former low. There's the former low, former low. So that's not divergence. You're not diverging. You are converging, or price is basically moving with momentum. Not against it. So that's not divergence. And same with the daily. On the daily chart, we dropped to a low, which was a higher low than the former low, and momentum was a higher high. So higher high in price, higher high in momentum. That's just I just see that as a counter, as a rally within a downtrend that's just started. No divergence, at least. Doesn't mean it can't just continue to rally, but there's no divergence. And because of that, I'm going to go with the bigger pattern, which is the uptrend line here, this big uptrend that was broken there, this big negative divergence that was building that hasn't really been taken out or burned through and satisfied. So I'm still looking for a downtrend. Blackrock, I'm going to stay short on this one. You can see here, clear uptrend line from the March 2020 lows. We had a bearish rising wedge, and we built negative divergence up in this wedge. So divergent high, divergent high. We then got a sell signal with a big gap down, and we're just getting a back test, a rally into resistance that's being faded so far today. They popped it right into that trend line resistance, and they're selling it down. So whether it wants to back test a little bit more, that's completely possible. So we'll just have to let it do that. But I still think we're heading lower on that one. I don't see any reason to get out of the trade, so we just stay with it until we have a technical reason to get out of it. And just looping back before I wrap up, here's American Eagle. You can see so far today, the day's not over, but so far selling it down and putting in a doji candlestick, which would be a reversal candlestick. So again, I kind of went through my game plan on how I'm going to trade it, I'm anticipating that we break down tomorrow. We sell down tomorrow. But again, if it wants to hold support, I'll just exit the short and look for the next break of this trend line support, which likely will be the real deal. This is a good solid upward trend line. We've now recovered it, but we're selling down, and this is a daily candlestick. So if you see a daily close below trendline support, then likely that was just a stop raid, kind of a fake out move where they pop it back up above support, run stops, and then it sells down. Okay, so that's really all I've got for this morning video. I'll probably put out a video towards the end of the day to see where we're at. So thanks, guys. Leave me a thumbs up. Catch you on the next one.